the Federal Reserve in fairly record-breaking speed here, enacting a whole bunch of programs. In fact, it was just a little over 12 hours ago the Federal Reserve did its latest program, the primary dealer credit facility. We'll talk about what all this means in just a second. That was followed earlier in the morning yesterday by the commercial paper funding facility. And then in the afternoon also it came out with not one but two now for the rest of the week, $500 billion overnight repo. So it's going to offer $1 trillion a day just in overnight. Let's do a little alphabet soup here. What's the PDCF? That is the primary dealer credit facility. They're going to be loans against a range of assets from primary dealers. It is the kitchen sink, folks, including corporate bonds, munis, asset-backed commercial paper, all kinds of stuff. A primary dealer can take it to the Fed and it can get it basically financed overnight or up to 90 days. Then there's the commercial paper funding facility, buys commercial paper from U.S. businesses. It's about it's a $1 trillion market. The entities that can sell to the Fed have about done about $700 billion of paper. Importantly, this comes with a $10 billion backstop from the Treasury's Exchange Stabilization Fund. And we tell you what Barclays said about this last night. They say the PDCF should help unclog dealer balance sheets and improve their ability to act as market makers. That has been just one of the problems we've had out there, in addition to money markets selling some of the securities they otherwise had, and people withdrawing from money market funds. So we'll have to see that as the morning goes by, if that, together with the stuff Eamon's reporting that the fiscal side is going to do, are enough to create some calm in these markets. Guys?
Hey, Steve, talking about the window.
Yeah.
Just talking about the window, I think I heard you saying yesterday that there were some complaints from people you talked to about how the rates at the PDCF were higher than they would be in the market. But, I mean, okay, fine. Go to the market. Don't come to the window.
Right. No, fair enough. But it wasn't the PDCF, it was the CPFF. So the issue was this, is that the Fed was charging 200 over OIS, and the market was at 122. And the result was the market didn't unclog. We'll have to see today. You're right in the sense that another person I talked to said, hey, it's good if you're a CFO of a company, you know that Fed facility is there. You'll pay over for a while, and then if you need it, you can have this other facility. But the other thought on that would be the Fed should have come in at or below market.